Welcome back, my awesome people. In today's episode, I will be highlighting the one sector that you should be buying when the supposed market crash or the next COVID lockdowns happen. I won't be talking too much about the upcoming supposed market crash, but instead what to buy when a lockdown happens, as this seems more realistic than a market crash that everyone keeps talking about. Now, I know that many countries are open and many have taken the vaccine, but for some reason, another lockdown will be upon us really soon. I am not trying to be a negative Nancy or a Debbie Downer here, but there will be another lockdown before the end of this winter season in various parts of the world. And as you can see, it is slowly happening. The vaccinations have improved recovery prospects for industries that require in-person dealing, like resorts, restaurants, retail, skilled nursing, and senior living. The housing sector is also booming with home sales, prices, and construction all on the rebound after a wild 12 months. North American governments have already unveiled a $1 trillion infrastructure plan and released virus stimulus checks for both business owners and job goers. So it would seem that the real estate sector is a direct beneficiary of all these funding and growth catalysts. So the main sector that I will be buying when the next lockdown happens will be REITs, real estate investment trusts. Now, if you do not know what a REIT is, it is a real estate investment trust that owns, operates, or finances income-generating real estate, modeled after mutual funds. REITs pool the capital of numerous investors, and this makes it possible for individual investors to earn dividends and passive income without having to buy, manage, or finance any properties themselves. Properties in a REIT portfolio may include apartment complexes, data centers, healthcare facilities, hotels, infrastructure, office buildings, retail centers, self-storage, and warehouses, and the list keeps going on and on. In general, REITs specialize in a specific real estate sector. For more details on REITs and what REITs I have in my portfolio, check out my video. And for more strategies and tips on money, investing, and creating financial independence, follow me on Twitter at Jacob Rant and get bullish on that subscribe button for the YouTube algorithm and smash all the likes and bells to get all the updates on my many fantastic investments. And comment below with what you think about these growing industries, because I do reply to every comment. And again, if you do not have a Wealthsimple trade account and you want $0 commission fees that won't eat into your profits, especially if you are buying penny stocks, sign up with my Wealthsimple link down in the description box below. Many new investors don't know the first thing about REITs. Most new investors these days strictly focus on learning how to buy stocks, but real estate exposure is very important as well. And a real estate investment trust is an excellent way to make that happen. First, let's talk about earnings for REITs. Net income is pretty much meaningless in the REIT world. That's because every quarter a REIT's management must revalue the portfolio. And most of the time, the values of buildings don't change, as much of a REIT's income will be paid back to shareholders. Now that we've gotten the basics out of the way, let's take a closer look at two of the best REITs to buy in the next lockdown, as these are the kinds of companies that will provide a combination of solid distributions and some impressive capital gains as well over time. The first REIT that I will be highlighting, and it is a REIT that I personally heavily own, is SmartCentres, ticker symbol SRU.UN, and they own 167 properties currently, and the majority are shopping centers with a Walmart on the property or always right beside it. The chairman actually of SmartCentres, billionaire Mitch Goldhar, is actually the first person who brought Walmart to Canada. So SmartCentres and Walmart have a very close relationship. While only 25% of rent comes from Walmart, the real benefit on your properties is the traffic that it brings to the other stores in the shopping center. Smaller retailers or service businesses can rent a space on SmartCentres property and inevitably some customers who went to Walmart are going to visit your store as well. With most of its properties in major cities and with lots of development and growth potential, that is very cheap. The valuation is great, but the development is what is most exciting. SmartCentres has an incredible pipeline of development projects. It has 284 developments currently underway right now, as it plans to build offices, hotels, storage facilities, apartments, condos, and seniors living facilities on its land. Between the development projects and SmartCentres' current net asset value of about $31, it would not be surprising to see SmartCentres trade at about $48 in a few years. Now, don't forget the distribution though. Right now, SmartCentres yields over 6%. Even without any capital gains, that will be a pretty good return since interest rates are really low at the moment. And the distribution is secure. In 2020, the payout ratio was about 90%. Not only does SmartCentres have a healthy payout ratio, but it has a healthy balance sheet with approximately $790 million in cash and debt to assets of just about 52%. So I'm still buying, and so should you. Now, my second REIT that you should put on your watch list for the next lockdown is Automotive Properties, ticker symbol APR.UN. I also own a large amount of this company as it has high growth potential while providing a 5+% dividend yield. And when it comes to pure growth, Automotive Properties is the clear winner. This small cap specialty REIT has loads of potential. Automotive Properties REIT buys car dealership real estate and then rents these locations back out to the operators. The company locks tenants into long-term agreements of a decade or longer with rent escalators because the operators value stability. It's a lot harder to move a car dealership than it is a clothing store. Since the company's 2015 IPO, it has more than doubled the size of its portfolio to 66 dealerships and 2.5 million square feet of leasable space. And with the transition to electric and hybrid cars, there's still much more growth in the future for this company. And with a 5% plus dividend yield, it provides a great monthly passive income. Various dealer operators are using Automotive Properties to accelerate their own growth prospects, since they can expand much faster if they don't have to buy the underlying real estate. Dilawari Group, which is Canada's largest group of car dealership, gives the REIT first dibs at any dealerships it sells. And Automotive Properties portfolio will expand as more dealerships get sold to these big operators, a trend that should continue over the next decade. Yes, COVID-19 has slowed these expansion plans of the REIT, but some dealers might even try to negotiate reduced rents. But these are long-term businesses that value stability, so they won't just abandon these locations just because of a few low months. So for those investors looking for something different in the REIT space, Automotive Properties is your go-to. One of the fun things about Canada's top REITs is they're a diverse group of companies, and you'll find a little bit of everything on the Toronto Stock Exchange. Whether you're looking for a retail, industrial, office, or residential REIT, it's got a bit of everything for all types of investors. Others, like Automotive Properties and Dream Office REIT, are specialty plays with great long-term potential. And others, like SmartCentres and Plaza Retail REITs, are just excellent operators that do everything right. Canadian REITs have been traditionally known as yield plays, but these top picks go to show the significant capital gains are also possible if you choose the right companies. So regardless of what REIT you decide to purchase in the next lockdown or market crash, make sure you do your own due diligence, because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple Trade account and you want $0 commission fees that won't eat into your profits, especially if you are buying penny stocks, sign up with my Wealthsimple link in the description box below, where you will also get 3 free stocks, just like Webull and the other guys, just for signing up. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I post my penny stocks, REITs, dividend, and speculative stocks from my portfolio and other investments I am currently buying or selling. I want everyone to have this opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting